I've got another couple of great setups today, one on American Micro Devices and one on the great British Pound Japanese Yen Forex pair. Stay right where you are for a few minutes. Hi, this is Tim from TradingStrategyGuides.com. Today we'll be looking at a trading range on the microprocessor giant, American Micro Devices, and a bear flag on the British Pound Japanese Yen Forex pair. We're going to take a look at those, but first let's check out the active trades and later on this week's trading maxim. Happy Monday. I hope those who celebrated Thanksgiving last week had a great one. Things might be slow starting off this week, but the next few weeks before Christmas should be good. Let's take a look at our active trades. As I mentioned in Friday's video, Bitcoin pulled back right here on huge volume Thursday and hit our stop. I guess everyone was taking profits so they could take advantage of Black Friday sales. Is Bitcoin done yet? Who knows? But I'll be looking for an opportunity to get into the next move, up or down. This move was everything I hoped it would be, and I increased my account by over 7% on this one trade. Now it's Tesla's time to fly. It hit our target last week right here, and I took half off for profits at the stop to break even on the remainder. I am now waiting for the PSAR to get up here above the break-even level to start trailing stops. Friday's candle up here looked like it could be the start of a pullback, but I expect this week will tell the story. Well, McDonald's disappointed us with the entry right here and a close back inside the bear flag right there. I closed it at 217 for a 0.9% account loss. This is the reason I like to take the loss when it closes back inside the pattern, because you can see on the very next day right up here it would have hit our stop loss and we would have had a full 2% loss on this. We not only win by winning, we win by not losing, and this is 1.1% that we did not lose. Our gold trade triggered a sell on Monday right here, hit our target on Tuesday, got half off in profit, moved the stop to break even. Now we're waiting for this PSAR to track down here so we can start trailing stops on this one. And lastly, Chewy triggered a half size buy right here. It was less than the average volume. I'm in it around 74.25. Stop loss will be 68.75. First target 77.92. And that's all the active trades for today. Let's take a look at today's trade picks. Today we're looking at a trading range on the microprocessor giant American Micro Devices, AMD. Just to be sure everyone's with us on this, a trading range is a consolidation with a strong support level like this one at 73.70 and a strong resistance level like this one at 88.70. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I'll take a break of a trading range in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. Volatility is the amount of daily movement of the price, and I measure it with the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to buy a daily candle close above the range or above 88.70, or we're going to sell a daily candle close below the range or below 73.70. To enter a full-size position, we want to see the volume bar reach up to the volume average right here. If it doesn't quite reach the average but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing this volume number by this volume average, and you should get at least 0.75. If you don't get at least 0.75, I suggest you stand aside on the trade. The stop loss will be 1.5 times the ATR. Your first target 1 times the ATR. So let's say this breaks up here and closes near here, or is about to close near here. Say 15 minutes or so before the close, set up your buy order and look down here at the ATR, multiply that by 1.5, measure that distance behind your entry, and that'll be your stop loss. Measure 1 ATR above your entry, and that'll be your first target. If after entering the trade we get a close back inside the range, we'll take the loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. Typically, I do this with two positions. The first position has a stop loss and a take profit, and that position will close automatically when the first target is hit. Second position will only have a stop loss, and that will be allowed to run. When the first target is hit, we'll manually move the stop loss to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on American Micro Devices. Let's take a look at Great British Pound, Japanese Yen. We got a pretty long-term bear flag on the British Pound, Japanese Yen. A proper bear flag consists of an incoming downtrend, like this right here, and then an ascending parallel price channel like this. A bear flag is a bearish consolidation, so I will only take a sell trigger on this. And the pattern is confirmed by a decline in the volume and volatility down here. Again, I measure the volatility using the ATR, which shows the average length of the last 14 candles. And the trade plan here is we're going to sell a daily candle close below the bear flag. I'm not going to bore you with this whole spiel again. The management details are always the same. If there's at least average volume, enter a full-size position. If there's only 75% volume, enter half-size position. Otherwise, stand aside. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. If you get a close back in the bear flag after you enter the position, close the position and take the loss. Get half off for profit when it hits the first target and move the stop to break even on the remainder. 2% risk on this trade. And that's today's setup on the British Pound, Japanese Yen Forex currency pair. Okay, that's the way I manage these trades. You do you, okay? Make sure you understand what you're comfortable with and trade it that way. You don't have to do it exactly the way I do. Now, one thing that helps me understand my mind in these things is the trading maxims. A trading maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. You guys know the deal. Use whatever tools help you maintain discipline, because discipline and consistency in everything are paramount. Today, Tim's trading maxim number 8, your first job is protecting your trading account. Okay, so you got a hot tip on a stock from your friend John, who trades the stock market all the time, right? And you're all ready to just totally go in on this tip, right? Well, stop that right now. Don't do that. No, not good. First of all, hot stock tips are not a great idea. The market does what the market does, regardless of what John thinks. That means without insider information, which is very illegal, he has no more insight than you do on that hot stock tip. He may be good at what he does, but you can't just blindly follow tips. You have to understand why the tip is hot, and you have to agree that it fits into your trading plan. But I've already digressed because I really want to talk about protecting your trading account. The real problem with the above scenario is that you're about to go all in on this trade. So what happens on the chance that it's wrong, however small or large that chance may be? You've gone all in and it's gone all wrong. Now you have no more trading account because you took a chance that didn't pan out. Now, I have a friend who borrowed a huge amount of money to invest in a cryptocurrency, and of course I advised him not to do it. Trick ending, guess what? He doubled his money and paid back the debt and now has a huge amount of money all his own. That didn't demonstrate my point very well, did it? Anyway, yes, it worked for him and he gloated just a little bit about it. But what if it had all gone wrong? Then he would owe the bank a bunch of money. Plus, he wouldn't have anything to trade next time. He had about a 50-50 chance of it going either way. I'm afraid his success may end up being his downfall, however, because I don't doubt that he'll try that again. And it's like the gambler that makes a huge win and lets it ride on the next roll of the dice and loses it all. Now that gambler is broke and can't make any money. My point in all that rambling is you have to limit your exposure on each trade. No single trade should make or break you. That's why my maximum risk is 2% per trade. If I lose a trade, it's very easy to make it up. And you will lose some as you build up your account. If you protect your account, you will always be able to continue trading and make up for any losses you incur, even the big drawdowns that happen periodically. Remember our American Micro Devices trade plan for today. We're going to buy a daily candle close above the range or above 88.70. Or we'll sell a daily candle close below the range or below 73.70. And our Great British Pound Japanese Yen trade plan for today, we're going to sell a daily candle close below the bear flag. For both trades, take a full size position if you've got average volume or better, half size if you've got 75% average volume or better. Your stop loss is 1.5 times the ATR. Your first target is 1 times the ATR. And take a look in the description box below for a link to the trade management video. Don't forget to sign up for my Trading Picks email list to get early notification of these picks. The link is in the description box below. Don't miss the Dream Trades segment on Wednesday's video. Click the link below to find out more about Dream Trades. And come back Wednesday for the next installment of the Trading Education series. This time we're moving on to the next module, and we're going to be talking about the strategy. And of course, be here Friday for my strategy of the week and next Monday for my trade pick. Our videos come out at 3 p.m. New York time. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great week, and I'll see you on Wednesday.